was looking for this on a day two continuation to the downside off of basically selling off the earnings report yesterday. So I did end up taking a 1 minute back through open and end up getting stopped out of that on the first move up. Then once we reclaimed, I wanted to give it a second shot, and I actually did hit the second back through open right around 293. Earnings day low was 290, or sorry, 291, and was looking for momentum to kind of speed up around there. However, once we kind of got into that level and bidders ultimately started to step back up and we weren't really able to have the momentum to break earnings day low, I did end up kind of trailing the position as we kind of got the pop up there. And then from here, I just wanted to work move to move at that point. So I did end up shorting back into 292 as we got around like the 940, 942 area. And then I did end up adding into the position at 290, giving the average price to 291. And then again, once we ended up making new lows and really not really able to sustain lower prices and bidders just kind of stepping the price back up, I did end up trailing the position again up to 290 as well. For me, I think right now what I'm realizing with this is just that the momentum type of trades on the day two after kind of a range expansion day aren't really the ideal prices to be adding into positions. It's more of actually getting more of the core size towards the top to begin, or towards the higher prices to begin with if you're looking for the downside trade. To me, I think that's kind of like we kind of saw with Walmart as well. I think to me, it just, there really wasn't a lift, but necessarily, or it wasn't necessarily a lift, but you were able to kind of get retracements to like recent sell areas where sellers were just ultimately kind of selling things back off. And I think that's kind of the mindset that I should have had with HG today, is instead of trying to get the lower prices adding into the position, really just looking for those kind of sell-off areas to kind of get the higher size to begin with.
Okay. So let's go through this very quickly. What's the catalyst?
Catalyst would be selling the earnings report. It was a day one catalyst. And then
technically the setup. That's not, I mean, the catalyst yesterday was was earnings, right?
Yeah.
So what's the catalyst today? Same thing?
Yeah, basically. It's just selling off the report yesterday.
Okay. So catalyst was there. So the setup, I think, is what?
Day two continuation to the downside.
Yep. And I think you could also even say day two continuation on a failed breakout, right? Or yes, on a gap fail. Because didn't this gap up and fail yesterday?
Yes, it did completely.
So, it's day two on a gap fail, right?
Yes.
Okay. What are the trades that are in your playbook that you can take on a day two off of a gap fail?
For me, it's looking for a first move up into a prior resistance. Or
okay, that's fine. What can you do after 10 o'clock when you don't get the first move up into prior resistance?
Look for the trend trades.
Okay. What's one way that a trend trade could show
up? For instance, to me, kind of right here, how we were able to kind of push up above VWAP and ultimately fail and kind of consolidate below VWAP.
Zoom out to a higher time frame. Go to yesterday's price action as well. Okay. So not on the daily. If you can go to just the yesterday's price action and today's price action. Okay. So we tried to rally, right after 10 o'clock, right?
Yep.
If you only look at the price action there, what are we actually doing when we can't rally up?
Just pulling back.
Just making a range, right?
Yep.
So could you potentially add a day two range trade? Yes. Where you're actually shorting into that up move versus waiting for the consolidation down because you're betting that that's a range trade.
Gotcha. Absolutely. Yes, absolutely. I think for sure going into it, seeing it there too, a good short would have been into like the 293, potentially risking up to like high of day.
So that's something that, you want to, everybody's saying, I want the first move up. I want the first move up. I want the first move up. I get it. That's the easiest trade, right? That's the best trade that you can ask for. What we got in Target today was perfect. It's exactly what you want to see, right? Everybody was saying that in Walmart today. We didn't get that. Okay, that's fine. What other trades can you make? Like, what other trade? You can't be the type of trader that only has one trade in his playbook, and if you don't get that, you're not doing anything, or you're taking subpar trades. You want to have your A plus setup is a move up into 300 or 298 or wherever. Your B setup is this after 10 o'clock consolidation at the lows in a weak tape, right? Because this is different than if Walmart would have just been bought up on the open, if Target would have been just bought up on the open, never went lower. Those are different trades. But you want to build your playbook out so that you have different trades within each setup that you have. So a setup day two does not mean only one trade. If you're the type of trader that likes to buy stuff, a setup day two, maybe a hard first move down into a support area, you're buying and you're getting long. That's perfectly fine. But you want to know what your setup, what your trades are in each setup. And you want to have multiple trades in each setup.
Absolutely. I think that's the one thing is right now, currently, the playbook does not have more of a day two range trade. It's just a continuation. And I think that's zooming out here and seeing it, it does clearly look like a day two range trade for a playbook setup. And I think that's the thing.
Yeah. I mean, so let's talk through the risk allocation to this, right? How much risk could you allocate to this setup versus the ideal situation?
The ideal situation, I probably would have said is like right now, 20 to 25%, versus a day two range, not necessarily being as highly convicted, 10 to 15%.
So there you go. But who knows? Over time, you may really develop that, and it might be you're risking as much or more if you get this setup, or this trade. Sorry, this trade in this setup. So.
Of course. And I think zooming out here, it clearly, to me, it looks like that 293 kind of retest risking up to high of day is a clear kind of short for a day two range trade. Absolutely.
Really interesting things that we get to study and we get to get better at, and, we get to learn from. And, for us on the desk, we're just learning this as well. Like we've had to learn a lot over the last year and a half because markets are getting tougher. And even as markets are getting tougher, we have traders that are putting up their best P&L days, weeks, months, ever. So what do? We learn from them. And the things that people are doing exceptionally well on our desk, at least, the people that are doing really, really well are the ones that are building out their playbook so that in a setup, they're going to have multiple ways to attack versus just that one. Because imagine if you would have been short from 294, half your size, and then add below 292 on that range break. It's 286 now, and you've risked 10% of your daily stop, but you don't have a reason to cover. Like, what's your reason to sell in this trade? Like a full ATR down, maybe?
I would say either a full ATR down or honestly a change in character on the tape with bidders ultimately really kind of stepping up.
Yeah.
Besides that, it's past the time of momentum, and it's just kind of it's a trend trade at this point. I think anything midday after 10:30 or 11 is ultimately a trend trade. And if you were able to kind of build into it on a day two range playbook up into that 293, 294 area, and then adding into it, like you mentioned, I think the only two reasons to sell would be those for a trend trade would be honestly if you ultimately see a change of character in the tape or your target profit your profit target gets hit.
Oh, cool. So that you get to playbook this as this is an added level within my whatever,
Yep. So. And I know that's like the one thing I know, obviously momentum has always been kind of the stuff I've gravitated towards, where range trades have not always been in the like in the tool belt necessarily. So it's definitely kind of definitely a good way to kind of look at things now. And it's easier to kind of see things just kind of zooming out a little bit and just being able to add it to that.
Cool.
And thank you for that as well.
Hey, go ahead and click our subscribe button so you don't miss any of the videos that we're producing for you in the trading community. And please take the time to add your feedback in the comments section for what videos you'd like for us to produce next and what you found helpful from this video. From all of us at SMB, train and trade well.